You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to and watching the Financial Survival Network. It's 11/18/21. What is going on with the price of gold? Have the markets, precious metal markets, bottomed? Well, let's go to our expert from Junior Miner Junkie, David Erfle, with us now. David, it's great to have you back on. So, hey, when we last spoke, you said, gold could get down to the low 1600s. We hit a bottom of 1675, and then like magic, it all turned around.
Yeah, very nice. You can never leave off the table a certain price points in the gold sector. No matter how bullish something looks, you can never take off the table the possibility of a price going down to a certain Fibonacci retracement level. We came down and we tested that 1675 level back in March, and then which was a 38.2 retracement from the 2089 level after it doubled from 1050 from late 2015. So it doubled from 1050 to basically 2100 in 4 years, and then it came back and it corrected 20%, and it tested down that 382 fib retracement level, and the 50% retracement level was about 1590. So I wasn't expecting that, but you always have to have it on the back of your head, because you never know what's going to happen when the sector turns bearish. And there's a lot of bears out there that are trying to run stops. So, but thankfully, on the very last day of the quarter of Q3, we had the gold price going down toward that level again. It got down to 1720 in the COMEX that day. And on the very last day, we had a huge reversal. We had smart money coming in and buying on the very last day on quarter end book squaring. And the gold price really hasn't looked back since. It's gone up $150 since then. So, yeah.
And it really appears that this time it's probably going to make record highs, assuming it keeps going. Yeah, you always got to be mindful of those resistance points and support levels, because gold, when it breaks them, you just know you're in for more pain or more upside. Our resistance level here was about 1860. It blew through that. It's hovering right around. It would be good, I guess, if it pulled back slightly under it, because then it would be getting ready for the spring, right?
1835, 1845 was a really strong resistance level. It tested that level a few times over the past few months. And once it blew through there on the 6.2 CPI inflation number day a week ago, last Wednesday, it ran up to the next resistance level, which is 1870, 1875, which is where it's at right now. And it's been trading sideways since then, which is very bullish. It became short-term overbought, and a nice sideways correction after becoming short-term overbought there. And I think that the market's going to go looking towards 1900 here by the end of the month. I'm looking for a monthly close above 1900. If we see that, then it's all systems go for the gold price.
Right. And so the stocks, slightly before gold started going up, the stocks started leading again, which is something we hadn't seen for several months. So that was yet another confirmation that the bull was back. And
exactly, yes. On that last day of Q3, the gold stocks began to show relative strength against the metal. They started to lead. And not only that, but the GDXJ was leading GDX. And the GDXJ is not really representative of the junior market. It's mostly representative of the mid-tier market. I mean, there is some juniors in there, but the weighting is really small. It's mostly mid-tiers with some majors. But when you see the GDXJ leading, for first, when you see the mining sector leading the gold price, and you see GDXJ leading the GDX, that's very bullish. And also, since that day, volume on up days has been higher than volume on down days, which is another sign of accumulation. And I've been telling my subscribers that once the GDXJ, once we see a weekly close above 47, then we're going to see the higher risk juniors, and higher risk juniors are juniors that do not throw off any cash flow. They consume capital. They need capital to survive. So once we saw a weekly close in GDX last week above 47, that's exactly what's been happening. The higher risk juniors have been leading the juniors, which have been leading the miners. So this is all very, very positive for the sector. You know, we had a washout low. We had what was a small bear trap reversal in the GDX. You know, we had long-term support was at 31. Everybody was keeping an eye on that level, and we had 2 weekly closes below there. So we had a lot of longs giving up the ghost there, and it reversed and came back above that level on that last day of the quarter, and it stayed there. And also, if you take a look at the GDX chart, it's got a 4-month inverse bottoming pattern, head and shoulders bottoming pattern, and there's also an island reversal at the neckline. And an island reversal is when if you take a look at the chart, you see a gap down at the start of the left shoulder and a gap up at the end of the right shoulder. So there's a bullish island reversal, and now that the sector has gotten short-term overbought, we might come down to test that neckline. That would be bullish. We've already seen the GDXJ come back and test 47, and you're seeing some buying coming in here. So it's looking very, very good for the precious metals sector into the end of the year.
And we saw a bullish reverse head and shoulders in silver as well.
Exactly.
Both metals. The other thing is daily trading patterns. It's something that I have always watched. Usually it means nothing. But what we've seen over the past month, over the past 3 weeks, is these upside reversals where gold, silver get killed in the access market, the after hours market. And then you wake up, COMEX opens, and it goes higher. Upside reversals, something we haven't seen on a regular basis, at least since, well, I would say 18, 19, we saw some there. But before that, 16, and before that, it was 11. And to me, that is a huge sentiment and trend shift in the market.
Absolutely. I couldn't agree more. And when you see a significant bottom forming this time of year, which is the end of the year, and tax loss selling influences these juniors.
Oh, yeah.
And the tax loss selling this year began early. It began in mid-June. As soon as the Fed started talking about tapering, while the stock market continued to go higher, people that were in gold stocks said, why am I holding these things? I'm down 10, 20, 30% on them since chasing them last year. So I'm gonna take my tax loss early, and I'm gonna rotate the money into the stock market, and that's exactly what they did. So I think a lot of that tax loss selling now has ended early since it started early. And what you do is you take a look at some of these smaller juniors, these smaller cap juniors, the juniors that are 100 million market cap and less. And once you see a strong volume day and a fishing line, and then usually a reversal on the same day, that was the last tax loss seller of size getting rid of his position. And I've used that method time and time again when there's significant bottoms taking place, and you see huge moves in your portfolio really quickly when you buy like that. I mean, let's face it, Kerry, the best way to make a lot of money in this sector is you buy fishing lines and you sell rhino horns. So when everybody was giving up the ghost for tax loss and for whatever reason, because the stock market continued to climb, that was a great time to be accumulating. And I've been pounding the table on that for the past few months. And you've seen a lot of these juniors have these huge moves out of very bullish falling wedges. because what you saw in a lot of these quality juniors was you saw, 5, 8, 10 times moves in the space of 4.8 months back last year. So those moves have to consolidate. And they consolidated and they printed bullish falling wedges in their charts. And once you had the last tax loss seller in each of these giving up the ghost, there's still a few yet out there that haven't bottomed completely, but most of the quality ones have. That's the time you pounce. I was building up a lot of cash into the end of September, and I started to deploy it the first week of October when I saw that huge reversal on the last day of Q3.
Yeah. Hey, and not to mention, we're also getting into the highly bullish seasonal move. Q4, end of Q4, beginning of Q1. That's when these metals generally move, and the stocks as well, of course. So all these factors combined, you see there's a total change in sentiment. And if we, like you say, we break the weekly or even the monthly close, 1900, then it's off to the races.
Don't just survive, thrive. The Financial Survival Network.
Doré Copper Mining is a premier, near-term, high-grade copper and gold redevelopment opportunity with tremendous exploration potential only 14 kilometers from the town of Chibougamau in mine-friendly Quebec. Doré Copper is debt-free and owns a 2,700-ton-per-day mill with an 8 million-ton tailings facility ready to be used. There is already power to site, and it is accessible by paved highway and rail. Doré Copper aims to produce a profitable hub-and-spoke operation of over 100,000 gold equivalent ounces per year, or over 60 million pounds of copper equivalent by 2024. Because of the existing infrastructure and location, a low capex is anticipated to recommence production. Doré Copper trades under DCMC in Toronto and under DRCMF on the OTC. To learn more, go to dorecopper.com. That's dorecopper.com.
This is the Financial Survival Network. The information you need to thrive. Now more than ever.
Yeah, a monthly close above 1900, would be huge, and a quarterly close at the end of the year above 1900 would be even more bullish. It would start to complete that handle on that huge cup and handle pattern. If we take a look back, if you take a huge step back and take a look at a 21-year chart of the gold price, the secular bull market began in gold at the turn of the century, when gold went from 250 to 1925 in 10 years, basically from 2001 to 2011. That was a huge move. And the cup now has been forming ever since for a decade, right? The top of the cup started in 2011. And then when the gold price went over $2,000 in August of last year, that was the cup. And the more bullish is the top of the cup is higher than the beginning of the cup. And now that handle has been forming for the past 16 months. And if you take another step back and you take a look at what happened when the gold price first went over that psychological $1,000 mark, right? It went over $1,000 for a day, right? And it didn't get back to $1,000 until 18 months later. And then once it blew through it, it ran to 1900 in a few years. So I think that's the same thing that's going to happen here, or close to it, is gold could run up to 2,000, have some difficulty, a little bit of difficulty, and then have a little correction, and then start to really take off towards $3,000. It's going to take a while, and I want it to take a while. We want these moves to be slow, because we don't want these things to happen really quickly, because A, that means there's something really bad happening in the world, and B, we want our junior stocks to have time to gather up enough volume and buyers to go higher. You don't want a huge move up and then have that correct for a really long time, which is basically what happened last year. You had that 4.8 move up higher that took 15 months to consolidate. And now, the bigger the base, the bigger the move. If you take a step back and look at the GDX chart, it's got a huge 7-year base. It came back to test that breakout level at 31, and now it's ready to resume its climb.
All right, so this is the beginning of the ascent, obviously, and look, if you follow John Williams, you know that the inflation rate's really closer to 14%.
The 1980 high of 15% is where it's at right now. If you calculate the inflation rate the way it was calculated back in 1980, that's 6.2 inflation looks like a really high number, but it's a lot higher than that.
Well, hey, go to the supermarket.
Exactly.
Order your Thanksgiving Day turkey.
Go to the gas pump. I live in California. It's over $5 a gallon in Southern California. And in Northern California, it's over $8.
That's insane. Yeah, but that's what they want. That's always been the plan. If we go back and we scan the headlines from 6-8 years ago, they were always saying, well, all these climate issues, we need $6 a gallon gas. And now they're going to get it. But how many people in California are happy about that $8?
Oh, not too many, especially when at the same time they're going to the market and the meat prices continue to go up. Prices and everything continue to go up, yet the packaging of what you're buying continues to get smaller. It's funny, what I've been using, Kerry, is Costco cookie calculation. Right? I buy these Costco chocolate chip cookies, right? I've been buying them for 5 years. And they were huge when I first started buying them, right? And they're about half the size that they were when I started buying them 5 years ago. They keep getting smaller and smaller and smaller. And the price remains pretty much the same, but the cookies get smaller. So, there's so many ways to hide this inflation. And what happened last Wednesday, I think a light bulb went on.
Exactly.
And you feel the shift that happened in the market. No longer are they believing this garbage that inflation is transitory. I mean, we had 4 consecutive months of over 5% CPI, and then a 6.2% print. It was like, wait a minute, this is not going away anytime soon. It's getting worse. And the tectonic shift happened last Wednesday. And I think the worst case scenario is maybe it comes down to test that breakout at 1835, 1840. But I really think the smart money started buying at the last day of the quarter of Q3, and all we need now is the stock market to really start rolling over, and you're starting to see signs of that. You're seeing insiders selling stock, and the biggest public insider selling stock was Elon Musk, selling a huge portion of his ridiculously overvalued Tesla
That's
shares.
because of the Twitter survey. The Twitter followers told him to do it.
I'd be selling it too if I was him. I mean, you've got the Democrats talking about taxing unrealized capital gains from billionaires. Like, the writing's on the wall, okay? That they want to raise the capital gains tax next year. So I wouldn't be surprised if you see a big hit in December just from some of these huge gains that people got in the stock market. Just rotating just a tiny bit of it into the gold stocks would be an explosion. I mean, if you take the market cap of the entire mining sector, it's like less than 600 billion. All it takes is just a few hedge funds to come in big into gold stocks, and it would really move the sector.
Amazing, really. I just don't get it, but I do.
I know. What's the only thing that's not extremely overvalued right now? Gold stocks. Yeah. Everything else is extremely overvalued. Everything.
Yeah.
And gold stocks have been thrown away when the fundamentals are lining up to be the most bullish in history, I think, to own gold stocks.
Mm-hmm. Oh, absolutely. Not a question about it. There's nothing else out there that actually has a positive cash flow. There was an article written. I'm sure you caught that article. Forgive me for not remembering who it was by, but did a sector by sector analysis. The only sector throwing off free cash flow, obviously, it's the majors and the mid-tier producers, but that's it. Nobody else has free cash
and royalty firms. Yeah, and they're paying dividends now. They're paying healthy dividends. They've cleaned up their balance sheets. They got tons of cash. They're paying, they're paying 3-4% dividend.
Mm-hmm. Yeah. No, it's
and the gold price is building a floor at that 1800 level. I mean, that's 1800 level is very significant. It was very significant back during the last bull market. It had a hard time I don't think it got over there on a monthly basis close during the first phase, and now it's consolidating that move, and I think that consolidation is about done. And once that handle's complete, once we have a $2,000 floor, you're really going to start to see it move.
All right.
And I don't see inflation coming down anytime. I mean, how about you? But anytime I go to the store, anytime I go to a restaurant, I've never looked at the menu and go, wow, look, the price went lower. That's never happened.
Wait until Thanksgiving. The turkey,
exactly.
Are charging $100 for the turkey. The ones that aren't are using it as a loss leader to suck you in. Hey, David, just tell us, junior miner junkie, how we subscribe and what's in it for us.
Sure, Kerry. Thanks a lot. And thanks a lot for having me on again. My website is juniorminerjunkie.com. It's junkie with a Y. And I also write a weekly column for Kitco that comes out on Fridays.
All right. Excellent. I highly recommend it. I'm a subscriber. And I always, every week, I check to see how much money David won or lost in his portfolio. Particularly, I like private placement portfolio, the Canadian private placements, because there's a real knowledge gap, especially for U.S. investors. They don't understand it. Timing gets screwed up because of regulatory concerns. The knowledge gap is so great that the potential for really making some major money is there. You got a question for David? Just shoot me an email, kl@kerrylutz.com, and go over to Financial Survival Network, sign up for free newsletter. David, we'll talk to you again next month, and happy holidays, and we'll see what the market does.
You too, Kerry. Always great to talk to you. Look forward to speaking to you again, and happy holidays to all your listeners.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.